I have the clip for you guys if you want to check it out. It's about 2 minutes. All right, let's do it.
For the general public, for those working families of people, why 2%? Why is getting it to 2% so important?
So that has become the globally agreed, essentially all major central banks target 2% inflation in one form or another.
How does that help my Nevada families? How does that help people in Nevada?
I'll tell you how it does. And it's I guess it's obviously not, it's not obvious how that is, but 2% inflation, to have people believe that inflation is going to go back to 2% really anchors inflation there, because, you know, the evidence is and the modern belief is that people's expectations about inflation actually have an effect on inflation. If you expect inflation to go up 5%, then it will. You know, if everyone kind of expects that, because that's what businesses and households will be expecting, and it'll kind of happen because they expect it. So having a 2% inflation goal which we had for many years.
Okay. What did you just say?
Not a bunch of nuts. By the way, that's my senator, Cortez Masto, so I'm proud of her. She did a good job. Normally, I don't agree because she's a Democrat, but she did a good job.
I mean, I'm speechless.
Yeah, me too. I don't know what to say.
I don't even know what to say other than, like, what a clown show.
Yeah. Yeah.
He's explaining what a psychological manipulation game it is, though, because he's saying if people believe it's going to be higher and we suck at our jobs, then it will be higher because we suck at our jobs, right? It's crazy.
Meanwhile, I mean, it's mathematical. It really is. You know, when you supply the amount of currency, I mean, I've used this example in some other interviews with, like, Monopoly. Like, if you flood the board with a bunch of monetary units, like, it's going to change the valuation of everything on the board. There's other ways to impact inflation beyond just the monetary, just the input of the units. I mean, you could go through a massive, like, if we're talking about a small jurisdiction, right, that has its own currency, if they go through, like, a situation where they're at war or they're dealing with this, they have to adjust the monetary supply. There could be damage to the infrastructure, which will drive prices. So, like, if I go in there and I destroy all the supply chains for oil, like, the price of oil is going to go up because it's harder to get it. So there's things that impact it, but at the core, on a long-term trend, like, if you're adjusting the number of units in the system, that's why it goes up. So the question is a very important one, and just watching them tap dance around is just, you know, hilarious, because there's no way you can answer that question.
It's so absurd. Like, why? And, you know, and this goes down to, like, the very important question that I believe that once people start asking this question, I don't think they'll have a response to it. And the reason I'm saying that is because if you look at all their proposals pushing their central bank, like the central bank digital currency, they always talk about making payments more efficient. For some reason, they avoid the inflation conversation altogether. And the reason I believe that is because it's indefensible. I don't think you can defend that position, especially if now we have an alternative that has proven that not only does it work, it actually gains in purchasing power over time. And I think the biggest tell is their reaction, or their hostility, better said, towards the industry. You know, Nick Carter wrote a great piece, right? Operation Choke Point 2.0. We all know how, you know, Caitlin Long's bank was treated, right? So it's just interesting how they're attempting to use Christine Lagarde's own words, really close off that escape valve. They don't want people opting out in the first place.
Completely.
So where does this go from here, gentlemen? Where do you, you know, things are obviously dire, as Preston was explaining earlier. You know, of course, we don't have a crystal ball, but, you know, what do you think happens in the next 6 months to a year? You know, I don't think we've seen a recession, Preston, or at least people don't realize that we're in a recession. So, you know, and the argument from the Fed is like, oh, you know, this is the soft landing that we were talking about. So do you still expect one in 2023 or 2024?
So I think people need to come to grips with what they're seeing in equity markets in particular, and Bitcoin might be drastically different than what the regular economy is doing. So you might have, like, ridiculous unemployment numbers, and you might have the stock market raging. And I think that that's something that none of us in our lifetimes have ever experienced or seen. And what you're getting, I did a different interview with somebody, and I was talking about it from just like a mechanical engineering maybe standpoint, like resonant frequency. So resonant frequency is when you're supplying an input, and the thing that's coming at you is basically 180 degrees out of phase of what you're trying to do. And so I think that you're starting to get to a point where central banking policy and inputs of more fiat is actually at resonant frequency with the rest of the economy. Right now is a perfect example where I was saying that the equity market on the Nasdaq and the S&P 500, HODL said it's closer to the high than it is the low, and you're at a point where the market would typically be getting ready to go through a big sell-off, and then maybe central banking policy. But they're going to be supplying so much capital, so much. Let me rephrase that. So much digital monetary fiat units into the system that I think it's going to blow people's mind, because it's trying to offset just massive amounts of credit impairment that is occurring because you have this upside down yield curve against inflation. And so as they continue to supply this, they're supplying more of the same policies that got us here, that broke supply chains, that is causing prices to rip. And so it goes to this, like, where are you going to put your money to preserve it? You have to own something that's scarce, and you have to own something that generates free cash flows that's not going to debase the number of shares that represent that equity. Those are the only two places you can go to preserve your buying power. One, especially when you're talking about Bitcoin that has a really small market cap that has the potential to mature into this really substantial market cap, is where you're going to see the biggest bang for your buck, versus, like Apple stock or something that's going to probably remain profitable, that's not going to debase the number of scarce shares that exist, that's going to do really well in the face of fiat that most people are used to measuring it against. So I know I was a little bit all over the place with the response, but you got to expect market conditions that are very different than what you've seen in the last 40 years. They're going to be out of sync with each other. You're getting this resonant frequency that's just causing disruption in supply chains that are barely profitable, which only continues the unwind and the difficult situation with respect to inflation.
There's this scene in the Simpsons movie when they put a giant dome over the town, and he goes, "Are you telling us we're trapped like rats?" And he goes, "No, rats can't be trapped this easily. You're trapped like carrots." That's what they've done to the market. There is nowhere to escape to. And you know what I mean? For those of us who are in Bitcoin, like, we already have our plan is in place. We're already good. We're in cold storage. Like, everything's fine. But like, imagine if you had to get out immediately into Bitcoin in size, and all of the on ramps and off ramps were all wonky and cut off. How are you going to do it? You really can't, right?
Yeah.
And so I think another thing too is, like, we always talk about Bitcoin being so volatile, right? And that, there was this Michael Saylor idea he was promoting like 2 years ago, that the volatility would go down over time, and we would collar this asset as the big money came in. That turned out not to be the case. I think the reason it wasn't the case is because the traditional system is growing more volatile by the day. Like Preston was talking about, all of these inputs and outputs are all over the map. And, moment to moment in the market, the emotions are so strong that it either feels like we're going to the Great Depression and we're all going to be fucked and we're going to lose all our money, or, oh my God, we're all so rich. This is like .com 2.0. This is amazing, right? And the market has become extremely bipolar, and it oscillates wildly between these two phenomena, right? And so I think what's going to happen ultimately is what Preston said, which is that the vast majority of Americans, people who without assets, people who, work a 9 to 5, live paycheck to paycheck, don't have a lot of savings, they're going to be really hurt by the policies that come later, because in order to prop the whole system afloat, you're going to have to flood the zone with cash, right? It's like that Steve Bannon saying, flood the zone with shit. You're going to have to flood the zone with cash. Like, you just have to. And you have to keep flooding it and flooding it and flooding it. And basically, like, every time you print, you're going to have to print twice as much as the time before. And it's going to be half as much time between printing cycles. So you're going to print twice as much, half the time. And that's an exponential. That's what Jeff Booth talks about. Like, and we're just going to a place where, here's another thing. Like, Balaji has this bet about hyperinflation coming to America in 90 days, right? People have been talking about hyperinflation. I was in a room of some of the dumbest people on Clubhouse the other day, and they were talking about hyperinflation and the dollar's collapse against the BRICS nations, et cetera. Now, I'm not saying that that is happening right now, okay? But I am saying that at some point this system unwinds, and hyperinflation is always demarcated by a loss of confidence in the underlying currency. So when you see people begin to lose confidence in the underlying currency, and they talk about it in mainstream media, it's a canary in the coal mine. It's a tell that something is going on, right?
And back to the point that I was making earlier, Hodl, with the showing like the UK's bond yield curve and the European bond yield curve. Like, we're so interconnected here in the US, our yield curve doesn't look all that bad relative to theirs. They're double-digit inflation. They're dealing with a situation from an energy standpoint that they have no control over. And if you don't think that a market of that size can have a spillover effect here to the US and the rest of the planet, you just don't understand how interconnected things are.
I think something people don't know about is the euro dollar system, right? And just how many dollars are created in Europe. I think it's actually more than are created in America. So yeah, not only are we interconnected, but it's basically the same system across the board.